If you're holding 7,954 HBAR right now, you're probably wondering how much that bag could be worth by 2026. Could it double, triple, or even go far beyond that? In this video, we're going to take a deep dive into Hedera, look at the current price and market cap, break down what makes its technology unique, explore how it's being adopted today, and of course, run through price predictions with market cap calculations so you can see exactly what your 7,954 HBAR might realistically be worth over the next couple of months. But before we continue with the video, if you're looking for a reliable place to trade crypto, I recommend BTCC. They've been trusted by millions for over 14 years, and right now you can grab a 10% deposit bonus on your first deposit over 500 USDT, plus unlock secret community rewards and extra bonuses of up to $10,055 per user. On BTCC, you can trade 300 plus crypto futures with up to 500x leverage and even access tokenized stocks and Forex, all with no VPN or KYC required. Use the link in the description to sign up, claim your bonus, and start trading today. At the time of recording, HBAR is trading around 24 cents with a market capitalization of about $10 billion. That means your 7,954 HBAR is currently worth just under $1,900. That's the starting point today. But the bigger question is how much it could grow by 2026 if adoption continues. What makes Hedera stand out compared to most other cryptocurrencies is its technology. Hedera doesn't actually use blockchain. Instead, it's built on a consensus mechanism called Hashgraph. Hashgraph is designed to be faster, fairer, and more secure than traditional blockchains. While most blockchains struggle with throughput and can only handle dozens or hundreds of transactions per second, Hedera can process thousands of transactions every second. Transactions finalize within seconds, and the costs are so small they're almost negligible, often less than a fraction of a penny. This combination of speed, scalability, and low fees makes Hedera one of the most enterprise-ready networks in the entire crypto industry. Hedera is also very energy efficient. Unlike proof-of-work blockchains that consume enormous amounts of energy, Hedera's Hashgraph consensus is lightweight and sustainable. In fact, it's considered one of the greenest distributed ledgers available. As institutions and governments look for climate-friendly solutions, Hedera has a big advantage in this area. Many projects already use Hedera to track carbon credits and build sustainability marketplaces, and this will likely grow as global climate policies tighten. Another unique element of Hedera is its governance. Most blockchains rely on open governance models or small groups of developers making key decisions. Hedera, on the other hand, is governed by a council of some of the world's biggest corporations. This includes companies like Google, IBM, LG, Dell, Boeing, and Standard Bank, among many others. The governing council rotates members regularly, and no single entity has permanent control. This model gives Hedera credibility that few other projects have. When global corporations put their names behind a project and help make governance decisions, it sends a strong message to enterprises and governments that Hedera is stable and trustworthy. Now let's talk adoption. Hedera is already being used in real-world applications, not just in theory. For example, Avery Dennison has built supply chain solutions on Hedera, helping companies track and verify products. Hedera is also playing a major role in sustainability, with platforms using it to tokenize and trade carbon credits. In finance, Hedera has been involved in pilots for tokenization of assets and even central bank digital currencies. Governments and financial institutions are exploring whether Hedera's efficiency and governance model make it a good candidate for powering future digital money systems. That's a massive potential use case if it materializes. Tokenization is another area where Hedera has a big opportunity. The future of finance is headed toward tokenizing everything: stocks, bonds, real estate, commodities, even event tickets. This requires networks that can handle huge volumes of transactions at low cost, and Hedera fits that description perfectly. If tokenization becomes a mainstream part of finance, Hedera could be one of the underlying networks making it possible. Now let's run the numbers. Your 7,954 HBAR is worth just under $1,900 today. If Hedera grows steadily and hits 50 cents by 2026, that would give it a market cap around $21 billion. At that price, your 7,954 HBAR would be worth about $3,977. That's more than double your current value, which is a strong return for a conservative outcome. If Hedera adoption accelerates and it positions itself as a key network for enterprise solutions, tokenization, and sustainability markets, it could climb to $1 by 2026. That would push its market cap close to $42 billion. At $1 per HBAR, your 7,954 tokens would be worth $7,954. That's more than a 4 times increase from today's value, and it's very achievable if adoption continues growing. In the moonshot scenario, Hedera cements itself as a backbone of global digital infrastructure. Imagine it powering tokenized financial assets, being used by major corporations and even central banks, and becoming a default option for sustainable finance applications. In that case, HBAR could reach $2. That would give it a market cap near $84 billion, making it one of the top projects in the space. At $2 per token, your 7,954 HBAR would be worth almost $15,900. That's close to a 10 times return compared to where you are today. The range of outcomes shows how much potential HBAR has. Even in the conservative case, your investment nearly doubles. In the bullish case, it quadruples. And in the moonshot case, it delivers life-changing returns. But the key factor is adoption. Hedera has the technology, governance, and partnerships, but it needs to keep growing its real-world use cases to support higher valuations. So what could drive HBAR to those higher levels? First is enterprise adoption. Hedera is designed to appeal to businesses that need reliability and trust. The more companies that start using Hedera for supply chain, identity, or payments, the greater the demand for HBAR. Second is tokenization. Trillions of dollars of assets will eventually move on-chain, and Hedera's low fees and high throughput position it well to capture a piece of that market. Third is central bank digital currencies. If even one major central bank chooses Hedera's infrastructure for its pilot program or rollout, the credibility and usage that come with it would be massive. Another driver is sustainability. Governments and companies are under growing pressure to reduce emissions and prove their carbon footprint. Hedera is already being used in carbon markets, and this could scale dramatically as environmental regulations tighten. This narrative also aligns with Hedera's low energy usage, making it one of the most eco-friendly distributed ledgers in existence. Of course, risks remain. Hedera's governance model, while praised by many, is criticized by some as being too centralized. Some investors worry that having big corporations on the council gives them too much control, even if members rotate. Another risk is competition. Networks like Ethereum, Solana, and other newer platforms are also aiming at tokenization and enterprise adoption. Hedera will need to maintain its advantages in speed, cost, and governance to stay competitive. Token supply is another factor. With a total supply of 50 billion HBAR, the release of new tokens into circulation over time could create selling pressure that slows price growth. Even with those risks, Hedera has shown strong resilience. It has survived multiple bear markets, grown its council membership, and continued to deliver on its promises. Unlike many projects that rely solely on speculation, Hedera already has working use cases and partnerships in the real world. That foundation makes it stand out in a crowded market. By 2026, your 7,954 HBAR could realistically be worth anywhere between $4,000 and nearly $16,000, depending on adoption. That's the range of possibilities grounded in real market cap math and adoption trends. The conservative outcome nearly doubles your money, the bullish scenario quadruples it, and the moonshot has the potential to change your financial future. So what do you think? Will HBAR stop around 50 cents, climb to $1, or push toward $2 by 2026? Drop your prediction in the comments below.